Hello, everyone. Welcome, welcome. Guys, we'll get started shortly here. Welcome, welcome. Welcome, everyone. We'll get started shortly here. Welcome, welcome.
Hi, David.
Hello, hey, Mary. How are you doing this evening?
I'm okay, thanks.
Good, good. We'll get started. We'll get started shortly here.
No problem. Thank you for holding this.
Sure. Hey, Chip. Welcome, Chip. Welcome. We'll get started shortly, guys. Welcome, welcome. Welcome, guys. Welcome, welcome. We'll get started shortly. This evening, it's a Q&A on the markets, trading systems. So welcome, welcome. We'll get started shortly. Hey, Tracy. Welcome, Tracy. Welcome.
Hello. Hello.
Hi there. We'll get started shortly. This evening is our Q&A, guys. Q&A. We'll get started shortly. Hey, Kim. Welcome, Kim. Welcome.
How's it going?
Good, good. Hey, Bill. Welcome, Bill. Welcome.
Hey, David.
Hello, hello, Bill. Guys, we'll get started shortly here. As you know, this evening is our Q&A. So, any questions on the markets, stocks, futures, Forex, cryptos, your trades, trading system, anything in general, all right? Any questions you guys have? We'll get started shortly. Hey, Peter, welcome, Peter. Welcome. We'll get started shortly. Lots going on in the market, all the markets, lots to talk about. We'll get started shortly. A big move in the VIX. A big move in the VIX. We'll talk about that. We'll get started shortly. Futures are currently down. Futures are currently down this evening. We'll get started shortly here. Hello, Margarita. Guys, we'll get started shortly here. Let's go ahead and get started. Welcome, everyone. Welcome. All right. Let's go ahead and get started. I'm going to share my trading screen here. All right. Okay. So you guys should see my screen.
Yes.
Oh, very good. Very good. All right. Okay. So as you guys know, on Mondays, we do Q&A, right? So this is your opportunity to ask any questions, get your questions answered on it could be anything, right? But related to what we do. So the markets, any stocks that you guys have, any symbols you want to take a look at, the trading systems, anything at all. So welcome, and I'll just go ahead and open up the floor, and just go ahead, guys.
With Exxon.
Exxon, okay. All right, 1 second here, Peter. All right, Exxon. We'll pull it up in Stock Boss here. Peter, what's the symbol? Go ahead.
O-M as in Michael.
Oh, you said O-M?
Yes,
O-M.
Michael.
O-M?
Are you talking about Exxon Mobil? The symbol is XOM.
X-O-M?
Are you talking about the oil company?
Yep.
Yeah,
Exxon.
XOM.
X-O-M. All right, Exxon. All right, nice chart. What are you looking to do here, Peter?
Daily time frame, it broke resistance.
Sure
So,
did, yeah.
It did what? At 86, I did an 87 call. 2
You did.
weeks.
Okay, 87.
Recommendation, 2 weeks.
Okay, you should be good. It just broke resistance, on Friday, and you got a nice follow through.
In Investor Business Daily talks about the cup and handle pattern. So expect another dip to make a handle of the cup and handle. I know on a daily chart it looks like a big old U. It looks like a cup, but the handle didn't form yet.
Yeah, but I wouldn't wait on that. Yeah, I wouldn't. So you thinking that it might come back and test support again?
Yeah, that's what I'm thinking about, preparing myself up. Will I do another pullback to form a?
I doubt it. The way it broke out, a cup and handle. I mean, this is right, kind of like here, and they do come back. Usually, a cup and handle is kind of prior to the breakout. Okay, so it kind of it'll hit resistance like this, come back like this, and then kind of consolidate in here, like here. Oh, that's your handle. So that's your cup and your handle. All right. And then what? And IBD is great. IBD uses cup and handle a lot. And what's nice about IBD, Investors Business Daily, is that they have a lot of good fundamentals to go with stocks. I always used to recommend, if we had big investors that came to us and wanted to do some like long-term stuff, I would always recommend IBD. Okay.
Yeah, just got their book and I'm reading it.
Okay, good. They've got some, they used to, years ago, I would get their paper, right? So they would have a magazine that would come they would send it to the house. And it was just awesome. They would have charts. The cool thing about IBD is they'll give you they'll give you the fundamentals, okay? But they'll also do the chart analysis, which few companies do, right? So
Right.
they'll give you the chart analysis and the whole technical breakdown. So yeah, if you follow an IBD, it's a great resource. And I think they still have the IBD 50, I believe, like the 50 strongest companies to trade. So, but yeah, Peter, I wouldn't wait. It's the cup and handle would kind of shape like, and you know, as we go through this, I'll find some for you. But so usually this is your cup here, and then it's gonna consolidate right along here. That's your handle, and then the breakout. Okay, and what you want to see is that the price is hugging. It's hugging that resistance, right? So it's consolidating, hugging that resistance right here. That's your handle, but it broke out. It
Right.
broke out. So yeah, you're not gonna get a handle here.
Question. My question is, if I'm trading on the daily and it broke resistance, how long should I buy my options for? I'm thinking I need to get a little bit longer to reach the potential of this trade. So what, any advice about, you know, the time frame of the option?
Well, you know, I mean, when you look at the daily, you're looking for a longer run. Okay, so think of your 240 as more of like a swing trade where you might stay in. If you get a nice break, you're looking on the 240 a few days to several weeks. Okay, I would usually we can get about if we can get a month worth of run on the 240, that's good. Okay, so if we can get 2 weeks, 3 weeks, 4 weeks, normally 4 weeks is what we can get if we catch a nice trend on the 240. On the daily, we could get several months, right? So we can get 2 or 3 months. If we're lucky, we get really good, right? Things are really moving. We could get, you know, 4 months, 5 months. But I wouldn't go, but I would say 2 or 3 months on the daily. But you know, these options, they, you know, they decay, right? So I mean, I think Kim had mentioned the other day, right? Perhaps like I would trade it. Peter, and Kim, you might have some input on that. And then, you know, do probably like he was saying weekly. You know, I just wouldn't go, because these, with the market the way it is, you know, who knows, right? I mean, it can break down at any time. But normally, Peter, when we trade on the daily time frame, we're looking for a bigger run. Okay. And I know Kim does lips. Kim, you do lips on these, right? On the dailies.
The lips. So my thinking is, if I'm gonna do like 2 or 3 weeks, I'll take the profit if it's doing, and I'll basically I'll roll it into a longer time frame option.
Yeah.
Is that a good strategy?
Yeah.
Take profit, buy something longer, 2 months out.
Yeah. Right. Now, keep in mind here that it's moved quite a bit already. So you trade in, you know, we don't know if this is the top, but you definitely in the reaccumulation phase. Okay. So just know that ideally right here should have been your first, your initial position right here. So just know that, I mean, it's been running, every candle here is a day's worth of data. So it's been running up for a while. Okay. Okay.
I like to get thoughts on on the daily, it made a U shape. The top of resistance.
So there's I was storing.
Yeah. Go ahead, Peter.
Yeah, that was my question.
Oh, okay. Okay. Yeah. The only concern, let's pull out the chart here. Let's, okay. So here's a better view. And we don't know if it's getting extended here, but just to give you an idea. Yeah. So here would have been your best trade here, Peter, right here on the buy signal right here. Okay. So the buy signal right here came in at 66, and now it's at 87. Okay, so just know that if you look here, let's take a look at the previous run up. Okay, so the previous run up was, let's look at this area here. So the previous run up was from 38 to 54. Okay, so 38 to 54, that's what, $12, right? 12 points. So then here is 66 to 87. So just know that it might be getting overbought up in this area here. Okay, that doesn't mean you can get, you know, so taking it out long, like, you know, you might be, that might be a concern if you take it out several months, because it's, let's take a look at a weekly time frame here. Weekly time frame. So we've got some resistance up in this area. I would say right here is pretty good resistance, right in here, right here, right here. All right, so that's pretty good resistance up in this area right here. It's getting near that resistance. So you might get price might slow down right here. It did it before here, right? So so you might, I mean, it might break through, right, with everything that's going on. You know, we know crude is really you know, really moving right now. But this would be a concern right now, right? You've got pretty strong resistance at 90. Okay, so at $90, you've got pretty good resistance there. Okay, let's take a look at the and like I said, I mean, it's came down from all the way down here. So we always want to be careful of that, right? So it came down all the way from 31, and now it's at 87. So let's take a look at the monthly time frame here. So the monthly, same thing here, Peter. On the monthly, you're getting there pretty strong resistance. So you got really strong resistance here, buddy, at 95. So you don't have a lot to, I mean, who knows, right? With everything that's going, you can just break through that, but this would be a concern.
Yeah, so far my options for 2 weeks.
Yeah.
So it's short-term play.
Yeah.
We'll see happens.
Yeah. Short term is what I would look for here. All right, good question. All right. Any other questions on anything? Anyone?
I have some questions.
Okay, Mary.
Can you hear me?
Absolutely. Go ahead.
You know, I'm new, right? And I'm not,
I know.
I'm not using the scalper yet or anything.
Okay, I know.
But my understanding that oil, gold, and some of the few others have had some really good days. And I want to believe that that's because due to the possible war.
Okay.
What is your professional opinion on these stocks, and how long do you think this was going to last?
Well, we don't know, right? I mean, we don't know. I mean, crude oil has been, they've been moving up for a couple of months now, at least. They've been on the radar, right? So they've been on the radar. Let's do here. So they've been on, if you look here, this is the futures market. So they've been running in the futures market for a while, at least a couple of months, right? Cam, it's been what, a couple of months at least, yeah. So in the futures markets, they've been running. I know they've been running in our on our heat seeker. So on our heat seeker for stocks. So right here, energy right here. Look at this, tons of energy stocks right here. So it's not just recent because of this war. It's been moving up prior to that. Okay, so I remember when it started moving, it was about crude was about $62 a barrel, and then just really started to take off. So it's been moving for a while, Mary. Now we don't know how long these moves will last, right? So we just get on, trade them, and we try to be as nimble as possible. But definitely it's moving. Gold and the metals, right? So gold, silver, and the metals, they moved back in when COVID 2001, late 2001 or so. Gold and silver made a big push and then flattened out for a bit, and now we're starting. So gold and silver is a new move. So it's a new move. We would say that it's breaking out on the reaccumulation phase, gold and silver. Okay, so that's fairly new, but energy, crude, they've been moving for a while. But good
Thank
question.
you.
You're welcome.
I do have one more question. Thank you for
Okay.
answering that.
Sure. Go ahead.
On cryptocurrencies,
Okay.
while I was driving home from work, and I think I listened to NPR news, and it said something about Russia, and something about Russia and Ukraine are using cryptocurrencies. Something about the government is going to go in there and stop all this stuff. And do you know anything about that?
No,
Okay.
I don't know anything about that. Does anyone out there know anything about that? Anyone? Yeah. As far as crypto, what I do, and what I like you guys to do is just focus on the price action. I mean, it's okay to follow the news for entertainment. Okay, and I'll put, for once in a while, if things are going crazy, right? Either to the downside or to the upside, I'll put on CNBC just for entertainment. But as far as trading, we always want to go to the chart. So we can take a look at Bitcoin here, Mary. So Bitcoin, as you probably already know, Bitcoin, we use Bitcoin as the barometer. We can trade it, but we can also use it as the barometer for the entire crypto market. So Bitcoin is the big dog, definitely the big dog, right? In crypto, in the cryptocurrency world. So we can look at Bitcoin to give us a gauge as to how the other cryptos are doing. Okay, and it works really, really well. So you'll notice that when Bitcoin is down, okay, I would say about 80 to 90%, sometimes even higher of the coins that are out there are also down. And then when Bitcoin is going up, vice versa. Okay, so yeah, I mean, there's a ton of stuff. There's always news on Bitcoin, right? And cryptos, but it's always good to go to the chart. Always good to go to the chart. All right.
Thank you.
Very good question. Thank you. All right. Any other questions? Margareta, what is accumulation? What's the accumulation phase? Okay, great question here. Do you have our chart on the 4 phases?
No, I do not.
Okay, so let me get that to you, share that. We'll go over that. And welcome, by the way, welcome.
Thank you.
All right. So I want you to take a picture of this screen here. Okay, it says the 4 market phases that every trader must know. So take a picture of it. And what I always tell traders is for me, this is how I keep the important stuff with me all the time, is I print it out and I laminate it. So this is an important one to print out and have it laminated. Okay, so I'll go through it quickly. All right, and for the rest of us, this is always it's good to review this stuff. Okay, hey Chris, welcome. All right, so the 4 market phases that every trader must know. So just understand that price doesn't move just randomly. There's a method to the madness, right? So accumulation, think of accumulation. Accumulation, you'll usually find it at the bottom of your chart, of your price chart, okay? So usually at the bottom left, middle or right, doesn't matter, but usually somewhere in the bottom. And what has happened is that the price came down from a high, okay? A lot like what the Peter stock we just looked at, right? It came down, fell down at the bottom, and now it's making new, it's making highs, right? So price fell down. So let's say it was $100 up here, fell down. Now it's $20, and now it's hitting a resistance and support. You're familiar with resistance and support, or support and resistance?
Yes, I am. Yes, I
Okay,
am.
very good. So price came down, fell down. Now it's a consolidating at the bottom between resistance and support. Accumulation, what that means is basically the institutions are accumulating shares. Okay, so we'll use stocks as an example, right? So they're accumulating, they're buying shares, and what they're doing is they're building positions before they move the price higher. Okay, so think of accumulation. And what the institutions will do is, rather than buying, taking one big position and alerting the market that they're ready to move the price up, they'll accumulate. So they'll take small positions. Okay, so let's say their goal is to get 500,000 shares. If they do that right away, that's going to push the price up. And guess what? Everyone else will jump in and push the price up. Well, they don't want to do that, or not immediately anyway. So what they'll do is each day or each couple of days, they might get, 50,000 shares. Okay. And they'll just build that. So they're accumulating shares before they move the price higher, so that they keep the price low. Okay, that's the way I like to look at it. So accumulation, just think accumulation, that's consolidation, right? So consolidation, accumulation, then the price, they'll move the price higher, break resistance, and then that's the markup phase. Okay, at some point, the price, because price doesn't move in a straight line, it's going to consolidate again. All right, accumulate, that's called reaccumulation phase. So they're building again, and generally what we want to look for in the reaccumulation phase, that'll bring in a lot of new buyers. Okay, and sometimes shorts too. So traders that are not savvy, they'll start to short and they'll get squeezed, and that'll push the price up. Okay, so the 4 market phases that every trader must know always starts with accumulation. The markup phase is phase 2. So accumulation is phase 1, markup is phase 2. Distribution is phase 3, right? Where price hits that high, right? Hits resistance, doesn't go any higher, all right? Then breaks support right here, comes down, and then this is the markdown phase. And within the markdown phase, we've got redistribution, where price is breaking new lows by hitting new support levels. New sellers are coming in. All right, longs are getting squeezed and so forth. All right, but to your question, accumulation always starts at the bottom here. When you look to trade, right? So when you look to trade, we are always looking for accumulation first, right? We're not looking to buy up in this area here. Like Peter's trade, Peter is entering right up in this area here. That's that reaccumulation phase. But it's a bit tricky, because he's not buying here on the break out of that accumulation. That's where we want to buy, right? So anytime it gets up in this area in the markup phase, that reaccumulation phase, guess what? It gets a little tricky, because we might be getting close to the end, getting close to that distribution phase. Okay, does that make sense?
Yes, it does. Absolutely. One thing I am wondering is, when it's consolidating, is there a certain way that things consolidate, that you know that the market is going through these phases, rather than just some long drawn out type of consolidation?
Well, yeah, I mean, there are different types of consolidation. Okay, I think the biggest, what you want to take a look at is where it's consolidating. Okay, I think that's the perhaps the biggest concern. So is it consolidating at the bottom? If it's consolidating at the bottom here, you should be looking to buy. So if it's at the bottom of your chart, price came from a high, right? Price came from a high. And this is when you do your chart analysis, we always want to look for price where it dropped, right? And consolidates at the bottom. And sometimes it'll consolidate for a while. It might consolidate for a few days, few weeks, some months. I mean, we've seen price consolidate for years, right? To your question, yeah, at the bottom, okay, that's where you want to be looking, getting ready. If it's consolidating at the top, right, two things can happen, right? We can either break resistance and continue, that's reaccumulation, or break support. And guess what? Now we start the markdown phase.
Okay, great. Thank you so much.
Okay. You're welcome. You're welcome. Very good. Good question. Good question.
Question.
Yes, ma'am. Yes, ma'am.
Kim mentioned loop. What is a loop?
What did I mention?
I believe it's called a loop.
A loop? I don't think I've said anything about that.
Maybe it was Peter. Somebody said a loop, and I was like, what is that?
When was this evening or a different?
Yeah, this evening.
I thought the only thing I said was just the symbol for ExxonMobil was XOM rather.
Maybe it was Peter that used the word loop. Did anybody else hear that? Or it's just me? Am I hearing things? Oh no.
No, you're not hearing things. That's fine. That's fine. I don't think anyone mentioned that, but that's fine. Okay. That's fine.
Okay.
Yeah, that's fine.
Okay.
Kim, can you in the chat there send Peter your email so he can contact you?
I got it here.
Yeah. Okay. Any other questions, guys? Anything else? And I can go over. So I'll do this. You guys, if you have any questions, just interrupt me while I kind of go through some of this stuff. Okay. But
hey, David, I have one that they may want to look at. Can you pull up a 5-year weekly chart on the company symbol is CNC?
All right. CNC.
That's Centene. It's a healthcare company.
Okay.
And if you look at like a 5-year weekly chart.
A weekly chart. Okay.
I just show you guys what a breakout looks like.
All right. Time frame weekly.
Now David's lines are in there automatically.
You want it on the weekly or the monthly?
On the weekly.
Okay, this is the weekly here.
Yeah, you guys see where he has that purple line resistance? That's what a long-term breakout looks like. The stock was consolidating for a very, very long time, from like 2018.
18, yeah.
Yeah, but when you get a strong breakout, again, the longer the side, the longer the move is, as far as the when it consolidates and gets to the top of the trading range, and it breaks resistance, then the higher it goes. But I was looking at this chart earlier, and I just wanted to mention to you guys, this is just a classic breakout. And notice that David, he didn't have to draw anything. The software automatically just put that up there. When he had that purple line there, yeah. You see that? See that, guys? But that's a classic breakout.
Yeah, I see it.
Yeah.
Yeah, these are when you have a long-term, these breakouts here. Here's another one here too. So, and as you guys do this, you'll train your eyes to look for this. This one here started in 2015 and then it consolidated for 2 years, 2015, 2017, the beginning of 2017, right? And then look at the move. Look at the move after it broke out. Buy signal here, and then this move here lasted a little, about a year, little over a year, about a year and a half here. All right, and then let me go back, get more data here. So it's good to and that's accumulation. So what they're doing here is they're accumulating, right? Building positions before they're not letting it fall. So they're not letting the price break support. They're holding support, and they're just building positions, getting it at a low rate, so low price. So they're building right here, holding support, and then boom. All right, and then they're doing the same thing up here. So they're doing the same thing up here. All right. So they're doing the same thing here. That's new accumulation is what Kim is referring to, right? So here is, I would say, yeah, this is okay, support, probably right in here, probably right here. This is probably better support right here. So they're holding the price right between the box right here, and then this is the breakout, right? This is the breakout. Peter, I'm trying to find your cup and handle. This one is a pretty close cup and handle, Peter. So right here, that's your cup, that's your handle. You see right here, Peter? I don't think it's there. Okay, cup and handle right there. All right. All right. All right. Yeah, Kim, that's a good example here. Good example there. All right. Any other questions? Any other questions, guys, on anything? All right.
So what's going on? Like, what's going on with this whole thing? Is it good to buy, or, you know, with the whole world stuff?
What do you think, Mary? I'm gonna ask you.
I really don't know, because I'm not the, I'm not the expert, or like, I feel like you're more of an expert than, well, definitely way more of an expert on this than I am.
Okay, so let's just use on, this is good. This is a good question, right? Good question. What should we buy? So let's use some common sense, right? So let's use some common sense, right?
Thank you.
If we were to buy anything right now, okay, let's just use, because guess what? Not all of us have been doing this for years, right? So just the average person, they want to get into this market, right? Right now, right? What's the one thing that's really going up right now? What's the one thing, Mary, that's really going up right now? And what's the one stock that Peter mentioned earlier when we opened up? Oil.
I mean, Exxon.
Yeah. Very simple. We buy whatever is moving. There's always in any market, right? So whether it's equities, Forex, cryptos, whatever, right? There's always something that's moving. And with what we call that, we say there's always a bull market somewhere. All right, there's always a bull market somewhere.
But what about the bust? Because it could bust anytime, right? Yeah, so basically, as long as we're looking at how the 4 market phases, we're okay, correct?
Yes. So your job is to identify. So the reason we have so many systems and we watch so many markets, because price will move. Traders, right? The big hedge funds, they'll move from one market to the next. And what they're looking for is just like their term, right? Buy low, sell high. So they're always looking at areas, right, where they can go, markets where they can go, that no one likes, that no one wants. Okay, and what they do is, so let's say price fell, okay, or that market crashed, right? So they'll this is what they do. This is what they do. Okay, so they will move from one market. We call it, we can call it, you know, money flow or whatever, right? So they will move from one market to the next, and what they're looking for is for a cheap price. Okay, so when one market comes down, so what they do is this: they'll ride a market all the way up. Okay, so let's say they're buying crude oil right now. So crude oil, I don't know if you guys remember this, but crude oil there was a time when crude oil was at what, $20 a barrel, $30 a barrel, right? So they'll buy in cheap when everyone else is getting out. When everyone else, remember this, Mary, when everyone else is getting out, right? And we call it, it's a nasty word, but it's called blood in the street. So when everyone is panicking, when the price is really going down, right? And everyone is selling and everyone is giving up, right? Those big investors, smart traders are waiting to start buying again. All right, they're waiting to start buying again. So they are always looking for opportunities to buy at the bottom, right? So I'm gonna share my screen here, right here. So this is where they're buying. Okay, so price came down, they're gonna be buying. So they were buying crude oil. They've been buying crude oil for a while, right? Driving that price up, driving that price up, driving that price up. So that's what you want to be doing. All right. You want to be, right? You want to be in whatever they're in, driving, as they're driving that price up. You want to be in that market, also riding their wave. Okay. That's what you want to be doing. When it's in the markdown phase, right? You want to be out or you want to be going short. Okay. So we always want to be doing this. So right now, crude oil is in the markup phase. Now, we don't know how long that will last, right? But guess what? It's at what? 100 and what is it now, Kim, a barrel, crude?
Hang on. It's trading at exactly 121.11.
Yeah, so just think about this, Mary. So they were buying crude at you know, a couple of years ago at what, 30, 20, 30, 40, 60, right? So they've been buying, making money, right? So, you know, you can still get some opportunities, but the idea was to buy it when it was all the way down here. Okay. So your question, you know, what should we be buying right now? Crude, right? Crude, right? Because they're buying it. And we know that because, right, if we look here, we know that because, so we don't just buy what we want to buy because we like it, right? We buy what they're buying. One second here. So if you look here, Mary, and that's a good question. If you look here, can you see my screen, Monster Futures?
Yes.
Okay, so this is the futures market. Can you see the heat seeker right here?
Yes.
Okay, so this is real time. Okay, and you look here, they're buying crude oil. They're buying crude oil more than anything, and this has been going on for a while. They're buying crude oil. So these are all the big investors, big traders, right? And you see here, micro crude, buying crude. And now they're starting to buy silver, right? They're buying silver, right? And they're also buying the volatility, okay? Volatility is VIX, okay? So we'll always know the cool thing with what we have here is that we don't have to guess. With the tools that we have, we don't have to guess, right? That's why these tools are important. It's gonna rather, I mean, there are tons of futures out there, tons of stocks out there, but having these tools, right? These tools are running automatically and we can track what they're buying, which is really cool.
Why are they buying? I understand the oil and the precious gold and silver, but what's the reason for buying? I see on the right side, wheat.
Well, we don't have to know, right?
No, but
Yeah.
I know, but you know me, I need to know a little bit.
Yeah, we don't need to know. We don't need to know. Yeah, all we need to know is that they're buying it. Yeah, there could be there could be a number of reasons why, right? They're buying it. We don't need to, we don't need to know that, right? We don't need to know that. We leave that for someone else to figure out. We don't have the time for that. We just need to, our goal is if they're buying it, it's in that markup phase. We want to be buying, we want to get in, and we want to, when they start selling, we want to get out, break support, sell, get out. That's it. That's it. Simple. Trying to figure out and analyze why. We don't have the time for that.
They are professional. They do fundamental analysis. They answer why. But yeah,
yeah, I mean, you know, these firms have big research firms, and even a lot of these firms nowadays, they've done away with all their research firms. I mean, they're using high frequency trading systems to trade now. So, I mean, you know, everyone is realizing that by the time that by the time we figure out why, it's too late. By the time we figure out why they're doing what they're doing, buying what, it's usually too late, right? By the time,
as a trader, we have to try to keep it simple because our job is there's a lot of things going on. So try to simplify things.
Yeah. Thanks, Peter. All right, Mary. All right. And especially for new traders like yourself, it's even more critical, right? Someone like Kim's been doing this for a long time. Peter's doing this for a long time. You know, they can take that information and make a quick decision. When we're brand new, we'll get lost in that data. Okay, so when we're brand new, and that's good too, like for Bill, the new traders, right? We just want to focus on price. Down the road, you can add a bit of fundamentals. Okay, otherwise you'll get lost, right? Okay. So, very good.
Yeah.
Very good.
Keep it simple, stupid.
Absolutely.
Okay, thanks.
Absolutely. You're welcome. Hey, Peter, go ahead, Peter.
I like to look at the QQQ.
QQQ, all right.
I have 2 put positions, and I took profit on one. And
Peter, you had a good day today. Market's
very good.
Down, yeah.
You know, I have multiple products on the QQQ, but this one I had a put position.
Okay.
And profit.
Okay, so let's take a look at it. Here's the QQQ.
My main concern is managing risk. So usually if it's I'm looking at whether the price will make a lower low or will make a higher low. If it makes a higher low, if it rejects this area and it goes back up, is a possibility of a reversal. So, you know, just those are my thoughts. You know, I want to hold it as long as possible, but I'm concerned about making a higher low over here.
Okay, so what I would do is this. If you're concerned about it, is do this. So I would put it on a 30-minute. Put a 30-minute. Not that you're going to make a decision on the 30-minute, but for just your own peace of mind.
Right.
All right. Just put it on a 30-minute and just watch it. Watch how it reacts, right? So here's your 30-minute. You're still trading it on your 240.
Right.
I like to do this really, especially when I'm concerned about the trade, and I don't want to give up, a lot of profit. So let's do this. Let's get some more data here. Yeah.
The hope is that it's gonna break the previous low. That's the hope, but it never, it's gonna work out exactly how we want things. But I'm gonna keep one position and let it see what happens. But I want to be nimble enough to get out when it starts, making a higher high.
Yeah, you'll see that you'll have plenty of time. You will have plenty of time to see that, and I'll show you how you can do that. I wouldn't do the 60, but I would do the 30-minute. Let's see here. Okay,
For
so
this,
what's that?
go ahead. I don't
Okay.
want.
Okay,
Go.
so what you can look at, and then you have the system, so you can put like right here, it has a short signal here on the 30-minute. You have a low here, so I think you'll take out this low. The way the price is moving right here, you could take out this low. This low is at 318. Okay, right now you're at 324. So I would wait. I would watch it on the 30-minute. Wait for that signal to give a sell signal. Okay, so wait for this to give a buy to cover, so close. Once it closes that signal, then I would that short here on the 30-minute, then I would watch it closely. If you really want to we did this with the pound yen. So if you're really just looking for an exit, okay, and not manage it, you're looking to just get out, you can put it on a 15-minute to kind of fine tune it a bit. Okay, so if you're looking, and this is a good practice. So if you see the move, right, it's approaching support, you've got some nice profits in already. Okay, you can always put it on a 15-minute like this. You got a sell short signal right here. It's still holding. If it closes this, get out. If you're looking to just, you understand what I'm saying?
Yeah.
Yeah. So if you're looking at your let's do this right here. If you're like, okay, I went short up here, right? I know that it's getting extended, right? Or I know that it's getting ready to hit a bigger support area where the price might not go through, right? Let me fine tune my exit. So yeah, so you're not just randomly getting out, you're still using the system, but you're putting it on a very, very small time frame, and then if you get a sell signal on that time frame, okay, I can get out. You might leave some, money on the table, right? But at least you'll be getting out quickly. You're not waiting for the 240 to reverse back all the way up in this area here, right? We trace back and then get out, right? You fine tuning your entry, your exit on a smaller time frame. Okay, you can even do it. I've done it on a 5-minute, right? So here's a 5-minute time frame here, right? So tomorrow you're watching that 5-minute. Right? You're watching this area right here. You're watching that 5-minute, right? So here's that sell short signal on that 5-minute, and you just, because that 5-minute, if the price continues to move lower, it will hold on that 5-minute.
5 minutes. Because I noticed makes a big dump, price will not like to stay in that area. It'll come reverse really quickly.
Yes. So yes, very good. Yeah.
Get out.
Yeah. So minimize that time frame. minimize that time frame to help you with that exit, and it will give you a pretty good exit. Yeah, it'll give you a really good exit where you'll get out almost perfectly, right? If
we
you
look at the brother of the QQQ, the SQQQ.
all right.
For people who wants to make a lot more money, that the technology stocks goes down. This
goes the reverse, right? Yeah.
The SQQ is the inverse of the QQQ, and it's 3 times the move that the QQQ would move, going down.
Going down, yeah.
This is my main position. I have about 200 shares ETF.
This is an ETF, yeah. So yeah, same thing here, same thing. Now, you know, the only thing though, when you do that, so one second here. So Peter, so when you do that, just make sure, let's put this on a daily to see here. I think I have it? I have it on a daily here. So the QQ, I have it on a weekly. Yeah. So you want to be concerned if you do it on that smaller time frame, right? That's you're looking to get out. So if you so don't fine tune your exit if you're trying to stay for the bigger move. So this is what's happening on the bigger move here on the weekly. Okay, so but I don't, if you're looking to exit, you can do that, right? Play with the smaller time frame. If you're looking for the bigger move, you know, I would keep it on, just stay on the 240 because it might mess you up looking at the smaller time frame. Only look at the smaller time frame if you're looking to get out, or if you're looking to take a swing trade or so. All right.
I need to take profits along the way. If I keep on holding it, my options gets butchered if it goes sideways.
Yeah, and I remember you had a concern with your IWM when it made that.
IWM, the last position, I only had 2 months and I got butchered at the very, I lost a lot of money on that one.
Yeah, so start working with fine tuning your exits. Try between either if you really want to squeeze as much profit as possible, right? As much profit as possible. You want to time it really, really good, 5 minutes.
Okay.
5 minutes. If you have some room, 15, right? 30. I wouldn't go higher than 30 if you're looking to time your exit. I wouldn't go higher than 30. Right? 60 would give up too much, but 5, 15, 30 max.
Thank you.
Okay. Sure. Absolutely.
How do you get, Peter? How do you find those QQQ and SQQQ? Where do you find that? Is that something that David gives you on Fridays, or?
That's a good question. I got first introduced to that by a portfolio. Basically, it was you could just do QQQ index ETFs. Okay,
so I was just curious because like I had never even heard of that. So yeah, just curious.
4 years ago when they talked about bear market ETFs. So that's how I came across it. But if you do just Google QQQ index ETFs, they'll introduce you. There's inverse for SP 500. There's inverse for Dow. There's inverse for IWM. So.
Okay, I just wasn't sure. And then David, you said stick to the 5-minute chart. Now, why are you, I promise this will be the last question I have today. Why is it that it's so important to be on the 5-minute for him versus 30-minute versus 90-minute? Why is that?
Okay, so let's take a look here. So so Peter is looking to exit, right? So what he's trying to do, so this is his bigger trade on the 240. So just think of the time frames, right? So And what we're doing is, Mary, we are zooming in. We're kind of zooming in price. So we go from, let's say we go from a monthly time frame. So a monthly time frame is a really big time frame, right? We're looking at every candle. Just think of every candle is a whole month worth of data. Okay, so on a monthly time frame, let me do this here. Okay, so everything we do is on a time frame. So here is the monthly time frame. So the QQQ on a monthly. See here, monthly. So every candle here is a whole month of data. So that's a lot of price action. So every time that candle, we get a new candle, right? That's after the month. So after, when the month ends, right, this candle here will end, and then this month here is this candle here. At the end of the month, okay, so at the end of this month, we'll get another candle, a new candle for the month of April. Okay, so just think of this, right? So the farther we go out is a monthly, and then we go to a weekly time frame. Okay, so here also weekly time frame. So every chart, every candle here is a week's worth of price action or data. So okay, so this price here, this candle here opened up on Monday. Okay, so today, right? So it made this move now. Now this candle will close on Friday because this is stocks, right? So on Friday, this candle will close here. So it takes every week. So we would have to wait a whole entire week, okay, when Friday for this candle to close. Okay, that makes sense? So we went from a monthly candle to a weekly candle. So a monthly time frame to a weekly time frame. So now we're going to go to a daily time frame. Okay, so a daily time frame now, every candle is a whole day's worth of data. So for the stock market, right, is from 9:30, the stock market opens at 9:30, closes at 4 p.m. Eastern time. So this was today's candle right here. Okay, so all of today's trading, right, was in this candle right here. All right, that makes sense so far?
Yeah, and the sellers are in control.
The sellers are in control. So now we're going to go further, right? So we went from the monthly to the weekly to the daily. Now we are going to go to the 240-minute time frame, which is what Peter is trading on. So the 240-minute time frame. All right, let me get that for you. That's 4 hours worth of data. So every 4 hours, the price will close. Okay, the candle will close. Every 4 hours, the candle will close. So let's change that right here. So here, okay, it's on the forward chart. We call it 240-minute or 4 hours, right? All right, 4-hour chart. Okay.
Yeah.
Okay, so this is his trading window. This is where he's watching. This is, just think of this is his, we call this his trading window. So this is what his trade is doing. What he wants to do now, okay, what he wants to do is fine tune his entry. So in order to fine tune his entry, he's got to move it all the way, his exit rather, he's got to do what? What do you think he has to do to fine tune his exit?
Excuse me, David, it's to fine tune his exit, right?
Yes.
Okay. Okay, it's to fine tune. So maybe we should look at the 5-minute.
Yes, so here's the 5-minute right here. And why would we need to look at the 5-minute?
To fine tune his exit.
And what does that mean, to fine tune his exit?
To make sure that he's going to exit on the fine tune on the money.
Okay, but what does that? But what does that? Okay, but what does that mean exactly? What do you think that means, to fine tune his exit? What is he doing?
He's watching it to determine when it's time for him to exit. But isn't this going to give him exit like, you know, like how it gives you an entry?
Yes, but what
Mary,
he's doing,
get-
what he's doing is he's looking
the
to
money.
get out quicker, right?
Oh, quicker
Yeah,
than that,
quickly.
okay.
Yeah, so he needs a
Ooh.
candle. He needs a smaller candle, right? So remember, we start from a monthly time frame, right? Or we have a month that he can't hold with a whole month, right? Then we went to a weekly time frame. He can't wait a whole week, right?
Mhm.
Because that
Yeah.
candle has to close, right? So he can't wait for 240 because now he has to wait 4 hours for that candle to close. Okay, he's trying to get out quickly if the price goes against him. All right, so if he's having to wait 4 hours, right, that candle might go all the way up like this. So it went from 320, 318 all the way to 330. He's giving up a lot of money. So he's moving that time frame down. Just think of it, right? The smaller the time frame, the quicker he can get out. Okay, the longer the time frame, yeah, you get it? Yeah,
Okay,
yeah.
got
Mary,
it.
Mary, I have to
Yeah.
get my money. It's on the table.
Yeah,
I don't take
yeah,
the
I
money.
get it. Peter,
I'm gonna
you're,
lose
yeah, you're good. Thank you. Peter, also,
money.
keep your camera on because you're a very good looking man. Yeah, so I mean, I'm old, so don't worry.
My mom and dad.
I'm done with men, okay? I have 4 adult children, so I'm done.
Oh, God.
But thank you so much for this. Yeah, I get it now.
That makes sense. Yeah.
Yeah, thank you.
You're welcome. So all he's doing is, and this takes a little practice, right? This takes a little practice.
Mhm.
Okay, this takes a little practice. So yeah, so what he's doing is and then what happens is as it gets closer, as it gets low, I mean, the price came all the way, Mary, from right up here all the way down here. So we know it's not going to fall and move down forever, right? So all he wants to do is take some profit, fine tune his exit and take some profits. Okay.
Perfect. Thank you so much.
Very good. Very good.
See
Very
you
good.
tomorrow.
Okay, perfect. Any other questions, guys, on any of this? Okay, any of this? Okay, let's go over quickly and then I'll let you guys go. Futures are mixed right now. All right. We've got things are good. Things are great. Things are great. Right? We can't complain. We're clearly in the markdown phase, right? Clearly in the markdown phase. Nice sell short signals. We got the price action we wanted. We wanted price to come down. We've been talking about this and get some selling and hold, and we're getting that price to hold. We don't want this. We don't want these right here, these weeks, right? We want nice candles. We want nice selling to come in, continue that markdown phase. The VIX is right here. I mean, this is what we want as traders. Here's the VIX right here at 36, right? It's getting up in near this resistance area here. Nice bullish candles. It's at 36. That's good. That's really good for the market to keep coming down. Okay, so that looks really, really good. Really good VIX here. They're buying VIX also in the futures market. So they're buying VIX right here. So they're buying volatility. They're buying volatility right in the futures market. See there, they're buying VIX right here. So that's good. The big boys, well, big traders are behind it, right? They're behind it, pushing that VIX higher, bring the market down. That's what we want. Okay. We're still watching cryptos right here, Bitcoin, right? We got a nice triangle forming here. Nice triangle here. We could move this a bit up here. Okay, so we're looking for that to break. Okay, we're looking for that to break right here. We got some pullbacks in Forex today. So we got some pullbacks, but it's holding, right? So some, pull back a bit, no big deal. They're still holding. Okay, so if you're in these pairs, just hold them, no big deal. They're holding. And that's all I've got. That's all I've got. So
David,
yes.
one last question. What
Yes,
happens when VIX goes over 40?
If it goes
Do
over
people-
40, it gets they panic.
Okay, so
But-
so the sellers are happy, the buyers are panicking. And
yes,
things
yes, yes,
when
yeah,
super
yes.
elevated.
Yeah,
Okay.
yeah. One it gets anytime it gets above 20, right? Just think of 20. It's kind of like here, right? Kind of just like we do here, right? If it gets above 20, right? Things are starting to really move, right, higher, right? But for the VIX, when the VIX gets above 20 and moves up, the market goes down. So the higher the VIX moves up, guys, the faster the market's gonna go down. So 36 is high. It gets in the 40s, 50s. That's gonna create a lot of panic. More selling, Peter. More selling. More selling.
Thank you.
More,
Yeah, because a bear market is very rarely seen. So I don't know what happens when
Yeah.
the VIX is high.
Yeah. So yeah, keep an eye on that VIX, because as it goes higher, and so if it gets in the 40s, 50s, 60s, man, guess what? This market is they're gonna dump shares. Okay, so I wouldn't, it's up to you guys, but hold your puts, hold your puts, hold your puts, hold your puts. There's no buying. They're not buying right now. Okay, and we've got this is what we've been waiting for here, and we've got it, right? So this is what we've been waiting for, right? Right here. Look at this. Boom, boom. Right, markdown phase, purpose, support, and resistance. A break of this, that's redistribution. And Peter, we'll take a look at your Russell, right? So right here, right here. So for you, I would be watching, I would be watching this level down in here. Right down here, 188. It breaks that. Remember, it breaks that. That's redistribution. When we get redistribution, a break of support, that's new selling coming in. That's not an area to get out. That's new selling coming in. So you got to get.
I'm gonna add more positions on the pullback.
Yeah. So, yeah. So that's, yeah, just remember, right? Just like here, every time it broke that support, that's new sellers. Remember, new sellers are coming in. Yes, longs are being triggered, longs are getting squeezed, but that's also new sellers coming in too. Okay. So these are areas here where, yes, we can look to take some profits, but just understand we can break just like here, look here, price is making lower lows, lower highs. So that doesn't mean that price will stop here, right? It can keep, remember, redistribution, price is moving lower. All right. All right, good job. So you've got some work to do, Peter, but better managing this than this, right? Up in this area here, up in this area here. So good job.
Peter's on a roll.
Well, you know
Yeah,
what?
he is.
Yeah, but you can do it too, right? So Mary, you
Okay.
can do it too.
Follow the phases.
Yeah,
Study that.
Yeah, you can do it too. You've been coming. You're very disciplined, right? You're very disciplined.
I think so.
Yeah. But just, we'll start small, right?
Do you think that I can eventually make about, I'm just looking to make about 1,500 a month.
Well, it's up to you, right?
Well, do you think it's possible, Peter? Do you think that's possible?
You can make
after I learn everything and I what was that?
You can make 3 times and more of that. Just
really?
depends on if
but
you
that's
believe
all I'm interested in. That's all I need in order for me to continue to have the lifestyle that I have.
Yeah, start small, work, just do the coaching, keep on doing the coaching, keep on coming to meetings. Just start with one trade.
Okay.
Yeah,
Okay.
we were all, Mary, we were all where you are, all of us.
We've all
right?
been there.
Yeah, this is, we know no one is born doing this. We all have to learn. So yeah, there's some work that you have to put in, some time, you have to learn this, but yeah, anything is possible.
Okay.
Anything is possible with this. I've seen it over and over and over where, people, students come in and within a few weeks, if they put the work in, and not that they're making tons of money, but they get, the cool thing about this is, it's really up to you. It's really up to the individual. That's all it is. It really is. It's not easy, right? It takes some work. You have to, there's
Well,
some,
yeah, nothing's
yeah,
easy, right?
yeah,
I mean, David, come on,
yeah,
I lived up until now on my own.
yeah.
I raised 4 kids on my
Yeah,
own.
yeah. So
It's
yeah.
been a real, it's been a real challenge. However, this fascinates me, because I did real estate for 24 years.
Yeah. Well, like I
So,
said, just what I would say is, get paper trade. You want to do some paper trading, okay? Demo trading, and then slowly start to get some real money. Get some coaching. Get some coaching. Keep coming to this. Learning the language. There's a particular language that we have as traders,
yeah.
right?
Yeah, I see where there's a learning curve right there. Definitely.
Yeah.
Definitely.
So
I need that.
yeah. So just keep coming. Don't expect for this to happen overnight. It's a process.
No, I won't. That's why I'm still working.
Yeah. It's
Yeah.
a process. I mean, look at Bill. Bill is a good example of someone who just started, and he's putting it together. It's not perfect for him, but he's working diligently, and he's putting it all together. That's what he's doing.
Mary, read the books.
Yeah, read the book.
Trading in the
Read the
zone.
books. I need to
Yep,
get them. I
trend
haven't
following,
gotten them
read
yet
them both.
because I didn't get them yet because I'm still contemplating the coaching, and David said he'll send me the trading trend.
Yeah. But do so this is what I want you to do tonight.
What?
Okay, tonight when we are done here tonight, go on YouTube. Okay, so go on YouTube and then do a search for trading in the zone.
I started that, David.
But I want you to do it. But I want you to do it.
Do it again. That's
Yeah,
what you're saying.
Yeah,
Okay.
I want you to do that. Okay, so it's an audio book. It's free. It doesn't cost any money. So YouTube, as soon as you're done with a lot of this stuff that we do is all about taking action. We have to take action, and we can't procrastinate. Okay, because guess what? If Peter procrastinate, guess what? He wouldn't be in the trades. And yeah, you just mentioned he's doing great, right? The reason he's doing great and the reason Kim does great is because they take action. So as traders, right, the worst thing we can do is procrastinate. When things are in front of us, things are moving, we have to take action. So that practice is critical. So part of that is taking action. All right. So that book, Trading in the Zone, is an amazing book. It's going to give you a lot of good knowledge and skill set, okay, that you need to have. All right. So go on there this evening after we're done, right? Take some time, just calm yourself down, relax for the evening and just listen to it. Okay, it's free. And through the week, continue to listen to it. I want you to listen to the whole thing a minimum of twice. Okay, minimum of twice, and then you'll come back to it. I've been doing this a long time, and I got once or twice a week. I'll listen to it. Once or twice a week, sometimes 3 times a week. In my downtime, I'm listening to it getting that information over and over and over again. Okay, so just do that, but we got to take action. We got to take action. All right. Okay, guys. Thanks. I will see you guys tomorrow. Great job with the markets. It's absolutely great to see the VIX move higher. Your peers that you're in, a bit of reversals, but stay with them. Stay with them. See you guys tomorrow. Take care. Bye-bye.
Thank you, David.
All right.
Bye,
Bye-bye.
David.
Bye,
Bye, everyone.
guys.